It's my thought that silver is the fuse to the derivative time bomb. I think silver is going to fail to deliver first. That'll spill over to gold the same day or the next day. And within 72 hours, markets will be completely dysfunctional if they're even open. You've got massive shorts that were put on for years and years and years to suppress the price. Now those shorts are being broken and you're going to see dead bodies. And those dead bodies will spread because of counterparty. So again, let me just say again, be careful what you wish for. Are you hoping for $200, $500 silver? Are you hoping for $10, $20, $50,000 gold? Be careful.
The insatiable demands coming from India and China primarily, and this is mostly industrial demand, although in Hong Kong, if you look at this King Kong 888, I think it is, Eric Young, he's showing you that a lot of wealthy Asians are coming in and buying, I would say boatloads of silver, but substantial amounts. North America, net sellers, Asia, net buyers, primarily, I would say the industrial side.
Silver is now the primary fuse for a global derivative time bomb, positioned to be the first asset to face a total delivery failure. This fracture in the paper suppression system could trigger a market-wide contagion within 72 hours. Bill Holter and David Morgan are veteran analysts who specialize in the collapse of credit markets and the specific supply-demand mechanics of the silver industry. They warn that the massive short positions used for decades to suppress prices are finally breaking, which will lead to a systemic dead body event where counterparty defaults spread like a virus through the financial system. The data shows a stark global divide. North Americans are net sellers of metal, while Asia, led by India and China, has become an insatiable net buyer for both industrial and wealth preservation purposes. This drain on physical bullion suggests that as the paper markets fail, gold could realistically explode into the $10,000 to $50,000 range, while silver targets a medium-level move toward $200 to $500. As the West continues to trade electronic digits, the East is securing the physical collateral, ensuring that when the derivative bubble pops, the transfer of wealth to hard assets will be the largest in human history. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
The metals have run big time, but all you have to do is look at a chart. I mean, you could look at you could have been a German in 1920 and said, the price of gold and the price of silver is crazy. But what happened 3 years later? And one thing that very few people are talking about, and people used to talk about quite a bit, was derivatives. The problem with the system today is that everything is financialized, everything is derivatized. And I mean, you're talking about over $2 quadrillion worth of derivatives. And all you have to do is get one market that goes offside, and that'll spill over to all markets. And I have posited for at least 10 years that I thought, because silver is the smallest market and the most suppressed, it's my thought that silver is the fuse to the derivative time bomb. I think silver is going to fail to deliver first. That'll spill over to gold the same day or the next day. And within 72 hours, markets will be completely dysfunctional if they're even open.
And they're stocking inventory and they've got to finance it. I mean, if I have to make a market in the metals, I might have, my bank account might be, 5 million, but I've got to buy up 25 million in product. I got to finance that. So I got to buy it and maybe below spot or whatever, but then I still have to finance that. I got to borrow the money from the bank to make that market. And the longer I got to hold that metal on the shelf, the more it costs me. So I'm willing to lower my premiums to move the metal so I don't have the financing charges. So that's one side of the market. The big people, yeah, they're coming in. These are, I've never bought gold before, David. What do? I don't want to make a rookie mistake. And of course, I set them up. But the insatiable demands coming from India and China primarily, and this is mostly industrial demand, although in Hong Kong, if you look at this King Kong 888, I think it is, Eric Young, he's showing you that a lot of wealthy Asians are coming in and buying, I won't say boatloads of silver, but substantial amounts. North America, net sellers, Asia, net buyers, primarily, I would say the industrial side.
Yeah, you're definitely seeing selling in North America. Retail is definitely selling. You've seen. I think what you're looking at is the economy is nowhere near as good as the official government statistics. There's no money on the streets, and people are raising money by liquidating metal just to live. Prior to, let's say, 2005, the United States was the game. But now it's the entire world, and the United States is not it's not leading as far as purchasing gold and silver. You're seeing massive demand out of Asia, and Asia, those people are cash and carry. Americans accepted, a contract for this, a contract for that, as good as gold, so to speak. But that's not the case. What we're looking at now is you've got Indians, you've got the Chinese. When they buy, they want the metal. And the problem is you can't print the metal. The metal doesn't exist. The real shortage is in silver. I mean, gold is considered money. Silver is not primarily considered money. The demand for silver comes from so many different industries, and it is cash and carry. I mean, you can't put a paper contract into technology. You can't put a paper contract into a medicinal use. It has to be the real metal, and the problem is they can't print it. And that's where the severe shortage is showing right now, and that's where it's going to break, is in silver, not gold. Gold will follow. And if there was no such thing as silver, gold would ultimately break on its own, but silver is going to be the blasting cap.
I talked about the run to gold before anyone talked about the run to gold. And I said, look, I know it's happening because the smart money is getting in a stealth manner, which was the banks. And they were buying gold at a rapid rate between 24 and 25. And then we started to take off. And I gave the analogy that it starts like a light, a very light walk, then a brisk walk, then a light jog, a full jog, a light run, a full run, and an all-out sprint. And that's a metaphor for how fast this market moves to the upside. And as I said before, I think we're in maybe the light run right now, and we're far from the all-out sprint. I don't know if we're far from it. I mean, maybe, we go limit up 4 days in a row and the exchange is closed because, there's chaos. People aren't getting delivery, as Bill indicated, and, game over. I'm not predicting that. What I'm saying is we have a very volatile market. No one knows how much real demand can be filled by real metal. That's the key, as Bill has said. And so, yeah, I'm in total agreement. And I don't think we have a long ways to go. There's my peer group, many are saying, we got a 10-year bull market in silver from this point on. In theory, we do. But in reality, no, because the financial system needs to be, or the powers that be, powers shouldn't be, want this thing to continue in their paradigm, which means total control with a digital-based cashless society. And they want to move to that before these metals wreak havoc with their current financial system.
There's no way to give a date. There's no way to time it. But just the action itself tells you something has definitely changed. There are no big smashes, buyers. What this is all about is, and this is something my past partner, Jim, who passed away two years ago, consistently said, is that the end game would be a cash and carry market, and the paper game would evaporate. And that's the paper is not sought after. I mean, he talked about $50,000 bid on gold and no one selling, and $10 an ounce offered on the COMEX and nobody buying. Why would you buy a contract that can't deliver? And that's where we're headed, is toward a cash and carry market versus the futures markets that are fraudulent. They're going to be proven fraudulent. That's the bottom line. When they can't deliver, that proves they were a fraud. Well, if gold and silver are unavailable, markets will be closed. And if markets are closed, you're not going to be able to buy miners you're not going to be able to buy anything. Banks will be closed, et cetera, et cetera. I would say that we are at the point now, and I warned people for many, many years. I always said, be careful what you wish for. You know, people are talking about $100, $200 silver, $5,000, $10,000 gold. And I always said, be careful what you wish for, because what kind of world are we going to live in under that scenario? The reason you be careful what you wish for is because, as I mentioned, everything is derivatized. You've got massive shorts that were put on for years and years and years to suppress the price. Now those shorts are being broken, and you're going to see dead bodies. And those dead bodies will spread because of counterparty. So again, let me just say again, be careful what you wish for. You know, are you hoping for $200, $500 silver? Are you hoping for $10,000, $20,000, $50,000 gold? Be careful.
Well, you know, I was actually, my thought on that was, you know, limit up for a few days, so a few days closure. But, you know, you have to think outside the box. Could you close the market? So basically what happens is you go to a cash market, like Bill keeps saying. So at that time, you know, the egg market and the milk market used to be in the futures industry. Neither one of those exists in the futures industry anymore, but they both exist on a cash market. So they would go. The problem is what happens if we go to a cash market? Meaning, if, pick a number, silver's at 200, how many people want to turn that silver into fiat? Some will, I would say, but probably not. So you're going to go to a market that's controlled primarily in a free manner between a bid ask, between someone that owns the physical and someone that wants to buy it for something else. Could be barters, like, look, give me this much silver and you can buy my used car lot. Who knows? But I don't see that happening could happen. I won't rule it out. I think, again, that the powers that shouldn't be are going to do their best to blame it on the speculators, maybe remonetize gold, I'm not sure, maybe put it in the new system. I agree with what Jim Sinclair said, if I got it right. Bill's right here, but you know, I think they're going to try their new system with a tie to zero, just their good word, and it'll fail, and they'll come back and have to tie the new system to gold. I think Jim's got it right, but I don't know. But he's a pretty clear thinker in my view. I've followed Jim Sinclair since I was a kid. So anyway, that's how I see it.
The global financial system is currently facing a systemic threat from a $2 quadrillion derivative bubble that has financialized every corner of the market. Because silver is the smallest and most heavily suppressed market, it acts as the blasting cap for this derivative time bomb. A failure to deliver physical silver is expected to trigger a 72-hour contagion, spilling into gold and causing paper markets to become completely dysfunctional or shuttered. Unlike North American retail investors who are currently liquidating metal to cover living expenses, Asian markets in India and China are operating on a cash-and-carry basis. These buyers demand physical possession, recognizing that paper contracts cannot be used for industrial technology or medicinal applications, thereby exposing the fraudulent nature of futures exchanges. Projections of $500 silver and $50,000 gold are no longer mere speculation, but a reflection of a world where fiat currency has collapsed and barter-based settlement returns. In this scenario, those holding physical bullion will possess the only neutral reserve asset capable of surviving a transition into a new, potentially gold-tied monetary system, while paper speculators are left with worthless electronic digits. Let's get back to the interview.
The problem is investors sensing monetization are just going to dump treasuries. I've talked about this several times before, that if you look at the last easing cycle, rates went higher, market rates went higher. And here we are again, they're starting to cut again. And where are rates? Rates are slightly higher than where they cut rates a couple weeks ago. So it's the Fed losing control of the yield curve, and that's a problem. That you have to understand that the reason gold and silver have been suppressed for all this time is because the U.S. Treasury had to be able to borrow basically unlimited amounts of money, and that's what this game is all about. There's mathematically they have to monetize, and mathematically it won't work. the money doesn't exist to pay the debt back and to pay the debt service. So what do they have to do? They've got to print more. And when they print more, that dilutes what's in existence. And they will dilute to oblivion.
Yeah, more and more they will print to keep the game going. And as far as like another Operation Twist where they play with the long end and try to get, interest rates to be quote unquote normal. Yeah, that's a possibility. I've thought about that. They'll probably try it, but they're at the end of the rope because no matter how much printing or buying they buy, basically the rest of the world is fed up with our dollar dominance. And that means the buyer of last resort is the Fed. So they are going to print until the market wakes up and says, wait a minute, this currency is worthless. Now, again, I want to be on record that I don't think it's going to absolute zero, but the perception that it's getting there quickly is already in play. And there'll be more and more momentum in that mean. And as that takes hold, you may see much further acceleration than we've already seen in these metals. I mean, for an example, if we doubled this year for round numbers in silver and platinum market, maybe they'll go up threefold next year. I'm not predicting that. I'm just trying to give you the idea of when we hit that panic manic phase. This will look like, a light run. When it becomes an all-out sprint, you're really going to see fireworks. And I think we've probably got another year or so to maybe where the new system comes in, the digital euro, the Amero, who knows? I mean, I think I don't know the exact number. I think it's 190 countries in the world, like 163 are making digital currencies. What does that tell you?
The fundamental reality of the current financial era is that gold and silver do not go up. Rather, the currencies they are measured against are collapsing. An ounce of silver remains a constant unit of value, but as fiat systems enter their terminal phase, a 100% rise in the metal's price simply reflects a 50% loss in the currency's purchasing power. We are witnessing a worldwide shift from speculative trading to cash and carry buying, where industries and individuals alike are securing physical metal to ensure they still possess wealth when the fiat experiment inevitably reaches its zero point. As the Federal Reserve loses control of the yield curve, the necessity for unlimited borrowing is forcing a policy of dilution to oblivion. With 163 countries currently developing digital currencies, the transition to a new monetary reset, whether through a digital euro or a gold-backed alternative, is already in motion. Industry leaders are no longer focused on price, but on the physical availability of the ounces required to maintain business operations in a high-tech, AI-driven future. We are moving from a brisk walk into a manic sprint toward hard assets, where those holding physical bullion will be the only ones protected from the total monetization of global debt. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.